Well, pressure is indeed on the Australian Central Bank to cut rates after we saw the central bank in the United States cut rates to zero, also launching $700 billion of quantitative easing to inject new money into the economy there, helping organisations to pay their employees and their expenses. All this in a bid to offset the coronavirus economic impact. Meanwhile, our sister nation, New Zealand, cut their central interest rate to 0.25%. Central banks around the world have also united, including the Bank of Canada, England, Bank of Japan, the ECB, the Federal Reserve and the Swiss National Bank, taking a controlled action to support liquidity from today. Despite all this, we saw US futures indicating that they would fall heavily at the open, reaching their limit down, falling by 1,000 points after the US Centre for Disease Control recommended cancelling events with 50 people or more over the next 8 weeks. That spooked Aussie investors, which is why our Aussie share market today fell about 5% just in the first 2 hours of trade. Despite that, a lot of companies with strong long-term fundamentals are holding up, and we've also seen scores of companies be upgraded today too. Defensive sectors like staples are up 1.1%. Telcos, materials and miners are in the red but down the least. Coles shares are up 4.2%. Woolies up 2.8%. Consumer discretionaries and industrials are down the most, though. We've seen Sydney airports clock a loss of about 13%, and the toll road operator Transurban down about 12% after international travellers will now be required to self-isolate for 2 weeks. All this comes despite US equities closing significantly higher on Friday, seeing their biggest gain since 2008, with the S&P and the Dow up over 9%, clawing back from their worst session since 1987, as investors there were hopeful on Friday of economic stimulus. And in Australia on Friday, don't forget, we saw the ASX 200 make its biggest turnaround in history, swinging from being 8% lower to 4.4% higher. In terms of company news, let's start with some good news. Fortescue Metals has been upgraded by Bell Potter to a buy, with the broker expecting its price to gain 17% on the back of FMG's unchanged dividend payout ratio of 70%, and the company also increasing their likelihood of profits rising. Annuity company Challenger says it's on track to meet its guidance. Their code is CGF. Reject shop TRF has started to receive stock again from Chinese suppliers, while its shares are up 6% in the first 11 weeks of the second half. In other news, the outdoor advertising company Media OML has withdrawn their earnings guidance. Air New Zealand AIZ has entered a trading halt, also asking some employees to take leave without pay. Downer DOW has suspended its review of its business amid extraordinary market volatility, and Dominos Pizza DNP has halted dining in the Netherlands and says it will move to zero contact ordering if necessary. And Crown Resorts CWN introduced social distancing and deactivated every second gaming machine and trades 9% lower, and Aristocrat ALL is down 14%. And lastly, oil is 5% lower at $30.50, with Woodside, a low-cost producer, down 7%, and Washington H. Soul Patts, which owns 50% of New Hope NHC, is up 0.6%. And lastly, the Australian dollar is buying 62.4 US cents.